Good morning, Paul Georgie from Allendale. It's July 22nd, Monday morning, and we've got corn a little weaker, soybeans and wheat firmer here this morning. The corn looks like weakness there is due to the weather forecast and some of the rains that we've seen over the weekend. The Chicago area got rain. Some of Illinois and Missouri. And basically about 50% of the Corn Belt received some moisture here over the weekend. The major growing area of Iowa, that northern half of Iowa, southwest Minnesota, still dry, no rain there. Temperatures are expected to cool off considerably this week. Today being the hottest day of the week and cooling down every day into the weekend, with chances showers in the Chicago area just about every day this week. So that's, I think, putting a little bit of pressure on the corn market. Soybeans, on the other hand, are getting its strength from the tight cash supplies that we've got. We see the processors continuing to need beans. The demand for meal is there. Their margins are very strong, although we are seeing weaker basis, but the futures are making up for that, the weaker basis in the soybean complex. The crop conditions report's out this afternoon. Trade's watching that and focusing on that as what kind of conditions we may get in that good to excellent category. Trade numbers right now are 2 to 3% lower in the good to excellent, or expecting 2 to 3% lower in the good to excellent category. August options go off the board later this week on Friday, so watch that for volatility as we go through the week. Also, this morning we've got some support coming from the currency markets. The dollar is down sharply. The gold, silver are up. A lot of risk-on type trading appears by funds around the world, and that could provide some support to the grain complex as we open here this morning. The CFTC report on Friday showed that the funds reduced their short positions in corn and wheat by a measurable amount, up to 18,000 contracts in corn. They also increased their long positions in soybeans on this Friday report. So funds coming back in to the long side a bit here last week. We had the cattle on feed report on Friday that 97% on feed, 95% placed, 96% marketed. Neutral to a bit friendly on the cattle on feed report from the marketing side of things. However, when we drill down and look at the numbers, the placements of 800-pound plus cattle were up 27% from a year ago, and that giving us an indication that the feedlots and the producers are expecting these cheaper feed costs to turn into profits and willing to place some of these heavier weight cattle. Cutout values, not much change there. Choice down 8 cents, select up 44. Pork cutout values were 22 cents or 24 cents higher. The profit margins at the packing plants are still a struggle to stay in the black, and that demand for product is still a concern as we move through this latter part of July. A lot of things going on this week, a lot of reasons to stay in touch with Allendale's research. If you got any questions, never hesitate to give us a call at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.